Today on the CEO Barbecue, we're looking for lithium in Quebec and Ontario, Canada, together with Libra Energy Materials. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, this is where I normally tell you the company's ticker symbol and walk you through their trading data of the last few months. But for Libra, there isn't a ticker symbol or trading data yet because this is actually still a private company. They don't plan to stay private for long, though, and they're currently working on an RTO deal with a shell company called Power Stone, which, if and when completed, will have them trading on the CSE under the ticker symbol LIBR. So that will be spelled out LIBR. I also don't have their financial statement yet to go through, so you have to pay attention to setterplus.ca for their official numbers once they become available, hopefully sometime this summer. For now, though, I'll just quickly run through the business case here. Libra Energy Materials actually used to be called Libra Lithium when I first heard about it because they staked a handful of grassroots lithium pegmatite projects in northwestern Ontario with the idea of being a counter-cyclical play to the lithium market. And then they also brought in KoBold Metals, the Bill Gates-backed private exploreco, under a 6-year earn-in agreement where KoBold can spend up to $33 million to earn in 75% in each one of the 3 projects that are under that agreement, while also paying Libra a $35,000 monthly consulting fee with some token milestones on top of that as well. If KoBold does move to that 75% ownership, Libra would then have to either fund its 25% stake of any future costs, or they'll have to be diluted to a 1% NSR at those 3 properties, but still retaining 100% of the rest of the properties. And in total, there are 6 projects here that I could see the overview of which is probably on your screen right now, but hopefully we'll get to touch upon each one of them later on in the conversation. Now, if and when Libra listed, they will have 57.5 million shares outstanding with 4.5 million options and no warrants for a total of 62 million fully diluted shares. 50% of the company is owned by management, directors, and advisors, and 4% is owned by institutions. The how, what, when, why, and everything else in between are hopefully all questions Koby and I will be able to get into during this conversation. But for this to actually become a conversation, I'll have to shut up already and Koby give you the word here. But first of all, thank you for being here today.
Yeah, thanks for having me. I'm excited to be back in conversation with you after all these years.
The pleasure is mine. It has been I think we spoke 2 or 3 years ago for the first time. You were still you're still an analyst at the time, so you've kind of come over to the dark side, I suppose. So it's something that we'll touch upon as well. But since this is your first time on a barbecue, we'll have to go through the smell test first, which we'll do that here in a minute. But let's maybe first talk about the why behind the company as a whole, as in why does Libra have to exist? I mean, there's plenty of public issuers as it is. The lithium market is not exactly in a bull trend. There have been many lithium discoveries already during the previous bull run. So why does the market need yet another lithium exploreco? And why does it have to be you?
Well, Libra started, well, it didn't start when lithium was in the gutter, right? You know, I quit my job at the beginning of 2023. Yeah, prices had started coming down by then, but there was still some optimism out there. And, you know, the company was formally incorporated kind of at the height of the lithium rush. So I'll say that the need for it is because, you know, when I was an analyst, I was paying attention to every company that was raising money for lithium. What we saw was a lot of gold companies that had pivoted over to whatever they can get financing for, which at the time was lithium. But what we also saw was a lot of, not to not to stereotype a large group of people because Toronto's guilty of it too, but I like to call them the Vancouver promoters. And judging by your smile, you know exactly who I'm talking about. So Toronto's guilty of it too, and I just like to poke fun at Vancouver because I am here in Toronto. But I'm talking people that were, part of the crypto craze and the cannabis craze, basically any opportunity to go raise money. So yeah, while there was a lot of money raised, a lot of it was just flushed straight down the toilet. And Libra started with me calling up my buddy Ben, who I used to work with in a previous life, saying, Ben, look what's currently getting financed. I bet you found more interesting looking stuff than this pile of garbage here. Anything worth staking. And that's how Libra was born.
Mm. Well, we'll talk about the lithium market, and we'll touch upon financing conditions, stuff like that later on. And I think this opens the door to a lot more conversation. But again, I'll have to start off with the man running the company himself for the smell test. Who are you, and why do you think you're the right man for the job?
I'm a mining engineer by trade. I spent most of my career underground. I have some open pit experience as well, but generally all in Ontario, a stint in Manitoba. I've seen in a relatively short career. I'm 33 years old. I have seen mines mature. I've seen mines go from advanced exploration to commercial production. I've seen companies go from advanced exploration to construction. I've seen mines fail, which in my view is the most important experience of my career. Seeing why something doesn't work rather than why it works. And I think what's important is, with my team that we have seen all facets of exploration and mining. We've seen what works and doesn't work. And I think what's really important when you're employing the kind of strategy that we are, which is casting a wide net, systematically working through projects, is being able to know when to walk away from a project when you no longer think it has mine potential. So basically, I think that our team knows what an economic deposit actually looks like, not just what a deposit looks like, but what an economic deposit actually looks like. And then after being a mining engineer, I pursued my CFA and ended up getting a job at Red Cloud Securities, which is how we met. And I covered precious. I ended up working my way up to being an analyst there, and I kind of pretended, to be honest, I pretended to be a capital markets guy for a couple of years. And at heart, I am into the rocks. I am a mining engineer, and that being said, at the height of the lithium boom, they needed someone to cover all these lithium companies that were popping up everywhere. And so, I reluctantly agreed. I didn't know anything about lithium, didn't know much about battery metals, and I wanted to be competitive. So I started reading as much as I could on it in a short period of time. I started reading books on it. I wanted to, um, try and be better or at least more versed than other analysts on the street that were also given the same task. And in a short period of time, I was regarded as a lithium expert. But, in retrospect, I don't think I really was a lithium expert. I think there's very few lithium experts that actually have, 50 plus years of experience in the lithium space.
Hmm. There's lots to touch upon there, and essentially you're going to have to wear all these hats now, though, and not the hard hats that are behind you, which I assume you gathered over your career as a mining engineer. But you're going to have to wear all these hats now of a marketing guy and a capital markets guy and a bit of a lithium expert, at least to pretend. But first time CEO, though, what do you think the biggest challenge will be for you in running this company?
Yeah, that's a good question. The biggest challenge is, I think, stuff that I can't control. You can control um, how we run a company. You can't control necessarily what the markets do. You can't control where investor appetite is at the time. You have some control over exploration success. Actually, I think that's an understatement. I think you have a lot of control over exploration success or failure, but there is ultimately always an element of uncertainty when it comes to that as well. But that's something that we can factor in and account for. Um, is similar to market conditions. You know, what we're doing now is we're trying to catch a falling knife, essentially. And I
Hmm.
think the knife's already fallen. That's my personal view, which is why we're now taking this company public when there's peak pessimism out there.
Yeah. Well, that's exactly where I wanted to go with this is why take it public now? Is it because you're having
Hmm.
trouble financing it privately? Is it because you think there's a larger opportunity? What's the reason behind taking it public again in what looks
Yeah.
like to be what's
So,
definitely a throw of the lithium market? So yeah.
well, like in my view, there's two. You can take a company public at the peak. You could take a company public at the trough. If you take it public at the peak and you're trying to capture the momentum and the hype that's in a certain market, what you're doing is you're probably going to wind up creating a bunch of bag holders, which is what literally happened.
Hmm.
And this is my first time CEO, and I'm trying to build long-term relationships. I'm trying to find long-term backers, people that'll back me on this and my next deal and my one after that. So um, I'm not in the business of trying to create bag holders. I'd rather try and catch a bottom and get people in and try and ride the momentum slowly, slowly up. Because in my view, I think we'll touch on the macro later, as you said, but as I said earlier, I'm no longer afraid to try and catch this falling knife. I think it's already fallen. I think peak pessimism is here, but here's the opportunity now for people like me. Um, I think that a lot of these companies are trading incredibly low, way too low. And I think that assets, there's a flash sale going on. And we have this large M&A list at our fingertips, and we are ready to execute on some acquisitions at the bottom of the market. And it's a lot easier to execute these as a public entity, right? You could use your paper as currency. People don't really care about private paper. They want to have some certainty that at some point you will be going public, that there will be a liquidation event eventually. And that certainty is a lot easier once you're already public. So I will feel really dumb if a couple years pass and I didn't do any bottom market M&A. So the strategy is somewhat changed in Libra. We went from being, we still are that. So it's not fair for me to say it's changed, but we're now looking at doing more M&A, whereas before we were more about, let's stake our own projects, make our own discoveries, and we're still about that. But now we have access to um, jurisdictions and ground that we previously too expensive for us to want to go acquire. But now you're able to get much more advanced projects for cheap, and some of these projects are really attractive.
We'll talk about them. We'll talk about the projects that you have right now and hopefully what you plan on doing in the future here in a second. Um, let's go back to the smell test though, Koby. Do you currently hold any other positions, executive or board positions with other companies?
Yeah, yeah. I sit on the board with a company called Honey Badger Silver. I'm the CEO of a gold company as well called Athena Gold, which is actually somewhat related to Libra. Libra is one of the largest shareholders of Athena Gold. Um, if you want, we can get into that later. I can get into it now, how that came to be.
Well, what I'm really interested in here first, though, is how much of your time are you going to be giving to Libra?
Sure. So it's worth mentioning that it's not like it's not like I'm splitting. Basically, it's the same team. So yes, I'm managing two companies, but at the same time, I am managing one team. So it doesn't feel like I'm managing two companies.
Insider ownership here is noted as 50% of the company. What percentage of
Mhm.
that is you personally?
11 to 12%.
11 to 12. How did that come to be? Where did would founder shares, or what's the average price that those are valued at?
Yeah, so we've founder shares, there was, I think, 18 million founder shares when we started out.
Okay.
The founder shares, sorry, founders continue to up their position every round. So right now our cost base, so our biggest shareholder, David Goodman, his cost base is now approximately the same price as when we first raised capital.
Okay. What is your cost base?
My cost base, I think it's like 2.5 to 3 cents, somewhere around there.
How much would you be listing at?
TBD.
Okay. Yeah. And it also depends on where it's going to go. Again, I
Yeah.
suppose at the beginning as well, first week and so on. But are you going to be, is that something you have kind of internal thoughts of or conversations on? Like, do you plan to be buying in the open market as insiders? Is the idea for insiders to keep participating in financings, or how do you see that?
Yeah, I think insiders will continue to support the company, absolutely. But I think something I really want to stress here, which is probably, I haven't seen it happen before, but 24 million of the 57.5 million shares out are in a lockup period that is beyond what regular lockup periods are. So when I structured this company, I admittedly, this was new to me. And when I was looking at how I've learned a lot, looking at how other companies are structured, and what they often do is they pepper the street. If you know what I mean, they give brokers, they give salespeople, they give bankers, they give promoters, they give. I'm sure you've been offered founder shares yourself, right? Is that fair to say? But like
Not in
people,
the way that I would have liked to. Like, I've never gotten like a half a penny shares or something like that. And I say I'd like
right?
to, but that's a bit of a deeper topic, I suppose. But it doesn't happen on my end. But I know what you mean when you say that. I do see
So
those broker warrants and everything else in between, the founders warrants and whatnot. So
yeah, so there was none of that. Like there was no the people that got founders shares were founders of the company.
hmm.
People that are rotting this out. And in fact, the biggest shareholders, so 24 million of the overall share count, so that's about 45% of our shares outstanding, is in a mutual lockup period, essentially where none of us are allowed to sell any stock. And there's no time period for when this expires. It's more event driven. So for example, if there's a takeout of the company, so we're riding this out for long term. There's no, again, I'm going to pick on Vancouver here. There's no Vancouver shenanigans where, you have a bunch of cheap stock waiting to unload at the market the moment that they can.
Yeah, that's exactly what I'm checking for here. That's why I'm asking you of your average cost. What about because you mentioned here until so essentially those shares are locked up until the company gets sold, or if the company gets sold. So it's a change of control fees. It's a change of control provision. Do you have change of control fees as well?
My personal change of control,
Yeah.
yeah, it's nothing abnormal. It's 200 grand in radical transparency.
Okay. Well, no. Again, I'm checking for that. It's not, you know, 2.5 million or something like that,
No.
relative to whatever the market cap ends up being. That's essentially what I'm checking for here, because I don't want you to be incentivized to sell the company at any cost. I want you essentially to be incentivized to create shareholder value. So that's why I'm asking. I
Yeah.
mentioned listing there. I noted to hopefully in the summer, based on what I've heard you say before here and there. But is that reasonable? Do you think you're going to be trading this summer?
Yes.
Okay, good. Let's move on to the rest of the team here. You've mentioned them here and there. Talk to me about the current technical team, how that come to be. Have they worked on and been successful with similar assets before? And yeah, who's in there?
Sure. So Ben Kuzmic is our vice president of exploration. He lives in Thunder Bay. Andrew Jettiman is our exploration manager. Both these guys have master's degrees in geology. Ben's undergrad thesis was actually in pegmatites. Um, and we all met while working together at Barrick's Hemlo mine.
Hmm.
So we all got to know each other. Ben developed quite a positive reputation, and you know, to be honest, he's a rock star, literally. And I always kept in touch with him because I knew one day I'd want to work with him. He's one of those guys that I think one day through some time in his career he's going to find a mine. And I think Andrew's the exact same way. So, I'm betting on these guys, and so far they've been great. I think our track record with as a private lithium company who faced most of our life in a shitty lithium market with very limited capital, I think we've done quite a bit with such little funds. I'd argue per dollar raised, we've made more discoveries than any of our grassroots peers, at least to my knowledge. And, we have that slide in our deck on that. But yeah, Ben and Andrew, they're award-winning geologists. We recently won a Discovery of the Year award for our SBC discovery. And these discoveries have attracted KoBold into lithium in Ontario, which is really cool.
Well, I do see that table in your presentation where you value that per discovery or per dollar raised discovery, essentially. So I do want to talk about that. We'll get to it once we're going through your projects here. The team that you're telling me about here, as well as yourself, do you or any of them personally own a royalty on any of these projects?
No.
Okay. That would classify in the Vancouver side of things then?
Yeah.
Well, no, it actually, I mean, it still happens, which kind of baffles me here. So it still happens. I've seen it on both sides, though. So not only Vancouver, jokes aside, unfortunately. But do any insiders, board, or executives currently provide services to the company outside of your regular management activities? Like I'm talking about helicopters, or marketing camp, or anything else?
No, not that kind of service. No.
Okay. Yeah.
So when we got involved with Athena and took over a gold company, it was my commitment that, we're not just going to double our salaries here and find another way to all get paid here. So the goal was, let's try and split the G&A between two companies as much as you can. Very much similar to like what other companies do, like the Org Group. They have a great model where they're able to split their G&A amongst several companies. They share a CFO, they share personnel and expertise, and you see it more often in Vancouver. And I think it's a great model.
Yeah.
Because when you're a sub 20 million market cap company and times are tough and you're doing all these keep the lights on financings to cover your G&A, like it's like a death spiral unless you're splitting your G&A with other companies. So we do have another company that Ben and Andrew work for this other company. Their employment is tied to it. So this other company pays the benefits, and then both Athena and Libra pay this other company a retainer.
Okay. Yeah, that makes sense. Okay.
So it's actually cheaper when we got involved with Athena. Now it's now cheaper for both companies to have that technical team.
How do you determine executive compensation here in your case, given that, again, you already have these discoveries? So I suppose it's not based on, if we make more discoveries, we pay ourselves more money. But what is it going to be based on? How are you going to structure and determine sort of the KPIs here that your compensation is going to be tied to?
I think discoveries are, that should be reflected in compensation. My compensation, I pay myself a 5-figure salary. Ultimately, my compensation for me, this is what I own of Libra is a huge chunk of my net worth. So ultimately I care about this company doing very, very well. And, I'll be the last one to get paid in order to ensure that we're able to put dollars into the ground. And that's what I've been able to do before. And it's made my shares worth more as a result.
What would you consider success then for Libra? Like if we're talking here in, let's say, a year, what would you want to see in order to feel successful? I mean, is it necessarily higher share price? Is it operational success? What do you classify as success?
Yeah, I think having more discoveries is one, having a higher share price is another.
Yeah.
Yeah, there's different ways of getting a higher share price. I guess it has to be, organic share price growth. What I'm referring to isn't, paying a bunch of pumpers in order to get your share price up. Like that's obviously not what I'm talking about. But I guess I want my share price to rise on the back of making new discoveries, to put it simply.
Hmm. Well, that's essentially what every explorer should want. You did change the name from Libra Lithium to Libra Energy Materials. If it is a counter-cyclical lithium play, why change the name?
Yeah. So I was talking about this shopping list that we have of assets.
Hmm.
And some of these lithium projects, or rather, some of the lithium companies, don't only have lithium in their portfolio. Um, and then some of the projects are also prospective for things in addition to lithium. So it's more to keep that optionality, flexibility open in the event that we do stumble upon something that winds up being, a huge home run for the company.
Hmm. What are you going to do with all the t-shirts and the hats, though? They all say Libra Lithium.
Oh, I still rock my vintage hats. Maybe one day they'll be worth something.
Well, that about does it for my smell test here, Koby. Let's maybe get more specific about these assets. Again, you've got six of them. I want to talk about their history because, again, if they're as good as you hope, how come nobody beat you to? Especially because you got them again at the peak of the lithium market when everyone was after assets. So how come you've
Yeah.
got them?
Well, at the peak of the market, people were raising money based on, what kind of projects could attract the most dollars and not necessarily what kind of projects are the most prospective. So, we have to keep that in mind. And you're right, like a lot of we were late to the game. We really had no choice but to go out to no man's land, stake ground that no one had ever staked before. So our Flanders North and Flanders South project, zero historical assessment reports to go off of. We basically ignored closology, which is how close are you to other lithium occurrences. And I think we have to keep in mind that lithium, grassroots lithium exploration in Canada is fairly new. So a lot of the discoveries being drilled off today, Patriot Battery Metals, of course, that was a poster boy child of the last lithium run up. That pegmatite, I've got a sample behind me actually, but that pegmatite was mapped in the early 2000s. There's a story, I don't know how true it is, but there's a story of a geologist having his lunch on the pegmatite working for Virginia gold mines, noted some spodumene, wrote it down in his log, and continued on with his hunt for gold. And so it was not really a new discovery. Like Patriot was the first one to drill it off, but you have to think if all these things were found totally by accident, the Tanko mine, they were chasing tin anomalies and accidentally found this zoned LCT pegmatite. Like so many examples of this. And you have to think if all these things are found by accident, what's it look like if you actually search with purpose?
Mm.
So our way of doing that was, okay, let's ignore the accidents completely. And let's take, okay, well, where should these things, let's learn all we can about lithium pegmatites. And let's think, where should they occur? Stake it and explore it.
Yeah.
So as I alluded to before, Flanders was zero historical assessment reports. There wasn't even any government mapping on it. Um, the only work that was done was, regional geophysics, which is completed over the bulk of the whole province, as well as these lake sediment surveys.
Are you saying lithium exploration is easy?
I'm not saying it's easy. If it was easy, there'd be a lot more discoveries.
Mm.
I think I counted in total in 2023 about six new spodumene discoveries in Ontario.
Mm. Well,
So if I didn't capture them all, hopefully it's at least under 10. Like considering how much money went into it, I don't think it's that easy. I think that there is a lack of, and there has been a lack of people that have genuinely been doing genuine grassroots exploration.
Do you think the market needs more lithium discoveries, though? I mean, you see your point for
Mhm.
a potential lithium shortage, but don't we already have discoveries that just have to be advanced toward production?
I'm of the view that a lot of the discoveries aren't that good.
Hmm.
I'm not really a believer in a lot of these, 10 million ton deposits at 1% Li2O. I think that in order to justify a conversion facility, that you need a consistent source of feed that needs much higher tonnage. Um, a lot of the projects as well are very remote, and lithium's a bulk product, and people forget that it's not like gold. With gold, you're shipping doré bars, right? With lithium, you're shipping a spodumene concentrate, and you're shipping essentially a gravel of rocks. It's a bulk product, so transportation access to infrastructure is going to really factor into your transportation cost. So being near infrastructure really, really matters.
Hmm.
But yeah, no, I'm of the view that lithium is a very immature sector, as an exploration for it has only kind of recently had funding go into it, and that the best deposits have yet to be discovered.
What are those? If it's not 1% Li2O, 10 tons of it, what is a good deposit? What's a deposit look like that actually makes sense or moves the needle here?
In general, I'll say I'll say this, like there's not a lot because lithium is prices are very, very low. But what we look for generally is tonnage potential per project of at least 40 to 50 million tons is what we want to see.
Okay.
So usually when we look at pegmatites, we look for projects that has outcropping pegmatites. We don't really have unless there's a good reason, which sometimes there is. One of the targets on our M&A list is this kind of target, but like we don't have the risk appetite to go looking for buried pegmatites and do all this, till sampling and trying to find something. What I'd rather see is outcropping pegmatites that are at least 30 meters width, approximate true width, because the width of these pegmatites has a loose correlation to the overall tonnage. If you plot like a drill intercept versus deposit tonnage, actually it's not that far off where you have if you have like a 10-meter true width pegmatite of that being approximately 10 million ton potential. It's obviously a very loose correlation, like because that doesn't really account for strike, but it still is a correlation nonetheless.
Mm-hmm. It sounds to me like you might have some type of a checklist. Like when you look at a project, maybe you can walk me through how you see that. But when you start looking into a project, what's your checklist? What are you looking for? Again, you mentioned infrastructure and so on, but maybe you can kind of summarize that for me.
Yeah, and like I'll say that just because something is missing a certain box doesn't mean that something else might outweigh it.
Okay.
So, if something is really far, but the size of the prize is massive, then we'll consider that. But I'll say there's no concrete rules, but we generally think of our projects, rank them on two qualitative measures. So that would be one, geologic potential. Again, we want to see pegmatites that are at least 30 meters width. Um, we want to see spodumene occupying minimum 15% of the pegmatite, hopefully north of 20% of the pegmatite, because then it's going to grade well. We generally look for the non-zoned type of pegmatites. So we want to see spodumene throughout the pegmatite wall to wall. We're not looking for one that might be a big pegmatite, but might be super zoned where you just have patches of it here and there. Um, so geologic potential, broadly speaking, size of the prize. That's what that means. And then the other thing that we look at our projects is explorability. So, okay, just because what explorability is if there is a large deposit hiding there, how likely are we to actually be able to advance it and find it?
So as the price, cost of the test, and chances of success is actually what Craig Perry from Inventa looks
Mhm.
for, but he's on the Vancouver side of things. So maybe you don't want to take credit for that. Jokes aside, I talk to Craig a lot. I like him. He's done some good stuff out there. So um, yeah, that makes sense when you talk about that. This might actually be a good segue into talking specifically about your business plan here, because again, you've got 6 assets and a JV on 3 of them. What's the end goal? How do you make money for shareholders here? Do you make a discovery, sell one asset, make a discovery in the second one? So how do you see this developing?
Yeah, sure. Well, I'm gonna shoot for the moon here. If I tell you that our goal is to be a major lithium player, within my lifetime, that's genuinely what it is.
What does that mean?
As in, I want to be a top five lithium company.
Like when yeah, but what does that mean in terms of, is it do you want to be a producer, or do you want to sit on a
That's what
deposit,
we're
or
aiming
like
for. Like, yeah, we're not. So I'm never gonna say like our goal is to go and develop something, make a discovery, and sell it, right? I that strategy isn't for me. I get that that's the strategy for most juniors, but I've been in this case in my previous life where you build something to sell it, and if no one bites, then you're forced to build it, and you're building it off of an overly optimized feasibility study in an undercapitalized company that has a high cost of capital, and you're going to fail because your feasibility study was built purely to market your asset. So, my philosophy is we build something up as if we're going to be the ones to develop it ourselves. And if someone comes along the way and wants to take us out for the right price, then sure, that's on the table. And sorry, go ahead.
No, you go ahead. Go ahead. Yeah.
Well, I want to put this out there that lithium is a uh, small but very fast growing market. And you look at the companies today, the top lithium producers today. So, we look at Rio Tinto is now a top five global lithium producer. Before that, that was through their acquisition of Arcadium. Before Arcadium, there was Allkem, and there was a merger of Oro Cobre and Galaxy, which had basically little operational synergies. You're talking about blending hard rock spodumene in Ontario versus picking up some stuff with picking up brine assets in Argentina. But what that merger did is, took junior companies and they wound up being, in a few years' time, we're talking less than a decade, ended up becoming a major lithium player. And look at Pilbara Minerals, like that's also a major lithium player. And what they did is they bought a failed lithium mine at the bottom of the market. They bought it at Altura, and now they're a major lithium player. If I tell you like our goal is to do this, if I was a copper company, and we want to become a major copper producer, a top five copper producer, I wouldn't be able to take myself seriously
Hmm.
because it's the barriers to entry are much tougher, and discoveries in copper are becoming more and more rare and harder to find those world class deposits. Um, and so the majors have already kind of locked up the best assets in the world. But with lithium, I think that there's still a generational opportunity out there to go and find these world class assets and be able to develop them.
Because I talk mostly to copper and gold companies, I am kind of used to not taking people seriously when they tell me I'm a junior and I'm going to be a producer one day, because of specifically of financing these things. So how do you
Mhm.
finance the company going forward in that case? I mean, is JV the way to go for you? Like, is it, would you have to only
Yeah.
finance 25% of that company? Like, how do you finance this from an explorer to actually, pulling money out of the ground?
Just one step at a time. Like we still are an early stage company. JVs don't always make sense. At the time, it made a lot of sense for us. If you're getting less value on your equity and you're getting more value on the project level, then it makes sense to do a JV earn-in style deal.
Would you still do that deal today?
Yeah, I would.
Let's maybe do talk about the deal that you've signed with KoBold here, and let's start off with the why. I mean, why is it a better deal to give them essentially most of the upside and retain 25% instead of having funded it yourself at first?
Because the earn-in, the dollars that they would have to put into it exceeds what our valuation of our company is in order to earn that 75%.
Hmm.
So I could take the dilution at the project level, or I could take the dilution at the company level. And to raise 33 million bucks as a private company in a very tough lithium market, um, it's tough, as you can imagine.
Yeah. Well, if you're asking me, I wouldn't know how to raise 10% of that myself, even for a gold company right now. So I can imagine it is tough to raise 33.
Mhm.
You're getting 35,000 in fees every month. Is that going to be enough to cover your G&A?
Our general G&A, it's
Yeah.
about that, yeah.
Okay. Once you're public, though, it's probably going to go up. What are you thinking? I mean, with marketing and everything, how much money are you going to spend as a public company?
We'll aim to spend well, my goal is to try and keep that as our burn rate. What I've structured the company to be right now is the have the ability to survive without needing to go to the market for 2 years if we were to just do nothing,
Mm.
despite the public company costs. I'm not saying that we're not going to be raising money. Ultimately, I think there are reasons to go and raise money, especially as we do some M&A. Some of these things should require funding, should we pursue it.
But you're not doing a financing with the RTO, if I'm not mistaken.
No, we're not.
Well, maybe we can actually talk about, is there room for a similar deal on the other projects, or do you want to move them forward by yourself?
For the right price. Yeah, like we're not closed off to anything, but everything's for the right price.
Hmm.
We would like to, like with all of our projects, like it's not like we staked them and immediately vented them off to KoBold. And I think something I didn't touch on there that I'm just going to circle back on is ultimately we wanted a partner that could help us make more discoveries. And KoBold has provided us um, a lot of expertise and a lot of resources that us as a small, lean junior company, frankly, doesn't have. Like KoBold is a $3 billion US company. They've got a big staff. They got approximately one data scientist per every geologist with them, and they have really cool technology both on the software as well as the hardware front. And it's allowing us to be able to cast a wider net, with KoBold's resources, and then plus, we're now able to also focus on some of our other projects as they earn into these ones.
Hmm. How's that relationship there? Is it intimidating? You hear about it all the time. People say KoBold, immediately think of Bill Gates, $3 billion. exploreco in the end is what it is. So how's the relationship between you and KoBold?
So far, so good. No, we're really happy with that partnership
Hmm.
relationship that we have.
So it's not like, do you have a joint committee, or how does all that work? Do
Yeah,
they do the work, or?
we are very involved. Like we still go to site. Andrew's out there in the bush right now with KoBold, and we have weekly meetings with them. And I guess our we know how to operate our projects locally. That's something that we're good at. We've been operating in this province and in Canada for a long time, and their team is very global. They do also have expertise here, but we kind of see it as we're kind of working these projects as if we're, one team.
Hmm.
There's
What do
no
you,
us versus them. So far, they've been great to work with, and I would not say that they've been intimidating.
hmm. What are you doing this year? What's exactly happening right now? You said they are in the field right now.
Yeah, more details on what exactly is happening will be published in a press release coming up.
So out of those six projects that you have right now, is how many of them are going to get work this year?
We're looking at working. So the KoBold ones, all of them. The ones that we're looking to work, Toivo for sure. Um, we also staked a new project in Quebec, which we haven't really released any details on, but we're pretty excited about that one right now.
Hmm.
So we shall see.
So you're going to Toivo this year. I think that's what's next to SBC, right?
Hmm. Hmm.
Why did but KoBold's not participating in Toivo, right?
No, when we did this deal, it was really important for us to ensure that we also had projects that we had 100% control over.
Because that's what I was going to ask. Is like it's right next to SBC, but they're not participating in it. How come? I mean, why did they pass on it, or was it simply not for sale or for a deal at the time?
Yeah, well, I think we were already in advanced discussions with them on Flanders as well as SBC before we actually staked Toivo.
Hmm.
So it would have just been adding something totally new into the mix when we're like very far down the path.
Right. Okay. Is it how's the topography and vegetation, everything up there where you are? Is it workable year round, or do you have to stop for
Yeah,
winter?
depends on the project, but yeah. So it's funny. Our Ben and Andrew have actually prospected in the winter and actually found lithium mineralization
Hmm.
by dusting off a pegmatite, with a broomstick and shovel. But that being said, the real prospecting program, which is walking around and stepping on as many pegmatites as you can, that's obviously much easier to do in the summer. So you're talking May to about Halloween is when you can go out and efficiently prospect. Much
Okay.
easier to do without snow on the ground.
Hmm.
And then in terms of topography, it really depends where you are. Like we've got projects all around Ontario as well as Quebec. Um, some projects, it's there's glacial cover on some of them, but there is little hints of outcrop here and there. So SBC, most of it is under glacial cover.
Hmm.
However, basically wherever there's outcrop, there's spodumene. It's honestly we couldn't believe it when we made this discovery because like the first day, I got a call from Ben and he's telling me, man, we found spodumene on the first day. Like it took us all summer and into the fall to find spodumene at Flanders South in 2023 and in 2024 find spodumene on the first day. Second day finds another spodumene dike, kilometers away from the other one.
Hmm.
So we're like, cool, we'll call it the day one and the day two pegmatite. And then on day three, they found more, they found like three more spodumene outcrops. So we had to come up with a new naming convention, which we still haven't really finalized yet.
Hmm.
Um, and then on Flanders, it's like the overburden is about this thin. It's very thin. The pegmatites stick right out of the ground. Pegmatites being um, they're hard rock, right? Think about it like your granite countertop. They're related to granite. So over millions of years, they erode slower than the host rock around it. So in this environment, they stick right out of the ground. You could see them from satellite imagery from Google Earth pretty easily. But Flanders is just loaded with pegmatites. Most of them are barren, and you have to walk on hundreds before you find one with spodumene on it.
What is the you also have to do some geochemistry, I suppose, before you drill it, or what's the process? How do you actually pick drill targets on these
Mhm.
spodumene?
Yeah, I think you want to have wide pegmatites. as being a good indicator. But in terms of the work that you do to get there, yeah, you have to sample these pegmatites. Um, you know, taking fist size grab samples, try and get an understanding of the distribution of spodumene. Um, you know, map them to death, and eventually, yeah, you poke a hole.
Mm.
You shoot it perpendicular to your interpreted orientation of the pegmatite, and um, depending on what you find, you might be targeting something that's wide. You might be targeting a series of stacked pegmatites as well. So you'd position it, to the outer extent of that stacked series to try and drill through multiple pegmatites. But yeah, it really depends.
Well, but so you're not looking specifically for cesium or potassium or anything else in those pegmatites where you say, oh, it's got to be that threshold
Well, that's
before we
it.
drill it.
Yeah, let's get into that actually. The um we like to see spodumene on surface, but at Flanders, this is a great example. We do use a Libs gun, which is like a portable XRF, but it could detect lighter elements such as lithium. And how we use it is, we have this love-hate relationship with our Libs gun, where we're like, hey, well, it's giving such wild, inaccurate values. And what we learned, we figured out how to make it work for us. So what we did is we um, zapped the micas in the pegmatite. So what we found is that the micas absorb all the trace chemistry around it. So if you have elevated lithium in it, um, low potassium, high rubidium, um, then you can home in on where you want to go. These things, the KRB ratios is something that most lithium explorers will pay attention to. And what we did is we went to the ministry's office and we took a bunch of spodumene samples from across different spodumene bearing pegmatites in the province. And what we did is we zapped not the spodumene but the mica to try and fingerprint what does a mineralized pegmatite look like based on the mica data.
Mm.
So a lot of these pegmatites, even though they stick out of the ground, there's usually some moss and lichen cover, and sometimes it could be hard to identify the stuff. But what we did is we plotted KRB versus lithium, and we found that there's a sweet spot where all these things occur. And it's not something I had it on our old presentation, but not on the new one. I don't want people relying on this because every Libs gun, even if they're fresh off the factory shelf, they are calibrated differently and you'll get wildly different results. So we needed something that worked specifically for our Libs gun.
Mm.
And we created this model that worked for us. And that's actually how we found the Homer spodumene pegmatite at our Flanders project, which is a Simpsons theme. So that was the guys. Honestly, it was like their second last day or so of the field season. We hadn't found spodumene yet, and they'd sample, bring it back to their tent, and they'd report the values on the Libs gun to us every night, and then the sample plotted a right in that spodumene zone, and Ben said, "Okay, guys, we're extending you guys another few days. Go back out to that pegmatite." They go back out, pull up some moss, and lo and behold, there's spodumene underneath it.
Mm.
So you have to. You're right. It could be tricky because if you're looking at a pegmatite that is only, I say only, say it's 20% spodumene, which is a very high grade. That's what you want to see. 20% spodumene, and you're walking through the bush. You're trying to sample pegmatite to pegmatite because they're everywhere. You don't have time to sit down and map every single one. You have to move on to the next one in order to make any coverage on this. These are large projects. So if you sample a pegmatite and 20% of it's spodumene, that means 80% of it isn't mineralized. And the whole rock assay data might look totally boring, but if you look at just the mica chemistry, that'll give you a better idea of what your overall pegmatite looks like, even though it's less accurate. So you know that dartboard uh, that shows the difference between accuracy and precision. Have you seen that before?
Sure. Yes.
So that's how we use our Libs gun. It gives us a better idea of what our overall pegmatite looks like compared to the hard assay data
Right.
when we sample just the micas.
Well, so this also kind of answers the question that I had before. Is lithium exploration easy? It's not, based on what you told me here. I mean, it is a process and it's more complicated, maybe. To go back to my idea here was to go through the projects one by one for Toivo. That process, has that resulted in definitive drill targets? Like if you have the money and the logistics, are you going to drill it this year?
We have not stepped foot on Toivo yet.
Okay.
So we made our discovery at SBC, and immediately after we staked Toivo. So we staked right along the sub province boundary where SBC occurs, and what we saw from satellite imagery was, large white outcrops. So naturally, we got excited, and we staked that. So that's all TBD.
Okay.
And I'll also say, like, drilling this year, it's all going to depend on, well, if KoBold wants to drill this year, um, on the KoBold earn-in projects. On our projects, you have to have, in order, it's going to be market dependent. Like in this market, good drill results don't really get awarded unless it's 300 meters of plus 1% Li2O.
Mm-hmm.
Think Q2, which is proof that a world-class discovery in a shitty market can still significantly re-rate your stock.
Right.
So it would have to be something massive in order to justify that. Or the cost of the test has to be very low. So maybe it's just a drill program where you have to drill it to know if you have something there, if there's cover, or maybe but you don't really get rewarded for exceptional drill results in this market, or at least it's a lot harder to. So our strategy right now is more so we're still going to do what we're good at, which is doing low cost, high impact exploration, call it. But we want to be able to bank up as many undrilled spodumene targets as we can. And once the market turns, that's when we go and drill our top three.
You don't have that top three right now, or do you?
No, we don't have that top three right now.
Hmm.
It's always changing. Like if you look at if you pull back that explorability versus geologic potential, like this is an exercise we do internally, and this always changes. This is an iterative process. The more we learn about a project, it gets upgraded or downgraded. So as things move to the top right quadrant, that's where we look to expand and prioritize. But if I tell you what our top three is right now, it might be a totally different answer in a couple months' time after we do some more exploration.
Right. Well, let's maybe just keep talking through the projects here. What comes next for you? I kind of have it written down. Toivo Burton. What comes next for you? Is that what would logically come for you after Toivo, or how do you talk to me through Burton, I suppose?
Burton is I'm not sure which version of the presentation you have, but Burton is a project that we explored and downgraded.
Okay.
And we dropped it.
Right. So you no longer have Burton. So how many, you have 6 right now, right?
We've got 6, correct.
Right. So Flounders South, Flounders North. Oh yeah. Okay. So you have this SBC, Toivo, Gucci, and then Nemiscal.
Yeah.
Yeah. Okay. Well, so the SBC, we've touched upon SBC a little bit here as well. What attracted you to that project? You call it an award-winning discovery. Um, yeah, talk to me about how you
Yeah.
followed up and everything around it.
Yeah, well, it won an award. So yeah, we didn't know much about it. We knew it was part of an Operation Treasure Hunt campaign, which is a program that the Ontario Geological Survey puts out, um, I believe annually. So years ago, I think there was I think they were actually looking more for there was a sampling program. I want to say that they were looking for either tantalum or cesium back in the day. And they sampled all along the sub-province boundary, this Uchi sub-province boundary. So like the Green Technology Metals Root project, for example, is on the same boundary, though we're quite a ways east from them. And
Mhm.
on this program, they sampled the highest cesium number there, and they noted this was the most evolved pegmatite out of the whole campaign. And generally, you want what they call evolved LCT pegmatites for spodumene to come out. And then we also liked that there was this, large mapped pegmatites. There was no noted spodumene in any of them that were mapped. No significant lithium results, just anomalous. But what we liked about it was, okay, it occurs along a sub-province boundary. There is lithium. This is a prospective sub-province boundary too. There are lithium deposits that form along it. And there's seems to be pretty large pegmatites here that are returning attractive KRB ratios and elevated cesium and elevated lithium. Um, so we actually spent 5 days there in 2023
Yeah.
and it was just I think it was like a four-person crew. It was really, really small. And it was just them walking right from the paved road into this area, taking some samples, and then we're like, wow, these are super attractive. These plot well within our spodumene zone. Let's make this into a bigger program in 2024. And that's exactly what happened. We rented a helicopter to make the process much more efficient. It was just a 12-day program. And in that 12 days, I can say with a straight face, we found more lithium than what was found in Ontario across um, all other lithium showings in 2023 combined
Mm.
in Ontario. So, we found in total 18 new spodumene outcrops over about a 12-kilometer trend, which is quite significant. So if you look at um, what other grassroots projects where they show, okay, we've got spodumene and outcrop here and spodumene and outcrop here, and let's exclude any kind of boulder trend. Let's just look for spodumene in outcrop. It's very rare that you find over a 12-kilometer trend of this. Something that might be good would be like 5 kilometers or so. So this was all found in the span of less than 2 weeks. And yeah, that's why it won an award.
What's the average lithium here across the full 12-kilometer corridor, though, if you include, because I suppose it's not just, I mean, it's not 12 kilometers of lithium, there would be barren
Mhm.
gaps in between. What's the average concentration?
Oh, this project's mostly undercover. So like you have a pegmatite here, and then you might not have another, at least no outcrop identified yet for another, kilometer or so before you find the next one. So it's hard to come up with an average. Obviously, like when you sample a lithium pegmatite, it's highly I think getting an average grade is often misleading. And in the height of the lithium rush, I did see a lot of people misleading investors through this, where they would just report grades. And obviously, if you sample just a spodumene sample, you're going to get elevated. You're going to get a nice sample.
Mm.
The better metric, I think, what people should be looking at is the percentage spodumene. And another example is I won't say it, but like there's a company in Australia that reported, I think, like 11% Li2O. And the maximum theoretical grade that you can get from pure spodumene is 8%,
Mm.
8.03% Li2O. It can't get any higher. So they were sampling a different lithium mineral that isn't recoverable, or at least not as recoverable as spodumene. So often in these pegmatites, you get other funky minerals in there. You might be getting emblygonite or lepidolite, um, and sometimes you can have lepidolite occurring with your lithium, and you sample a piece of spodumene that also has this purple coating around it like lepidolite, and you're going to get elevated grade. However, what matters more is what percentage of your pegmatite is spodumene. So generally, you want to see at least 15% spodumene, or at least that's our criteria.
Does that mean you're going to have to, because you don't know if there's lepidolite, or do you? Are you going to have to do met work on it this year?
Lepidolite's something you could see pretty easily, unless it's
Okay.
like, yeah, it's a pretty rock. It's purple. I've got a sample here.
Yeah.
Yeah, like you could hard to see on my camera here, but this is a very purple rock.
Yeah.
Spodumene is something you could see pretty darn easily. It's
Yeah.
this
Crystals. Yeah.
yeah, this thing right here. So
How did it,
uh,
what's your theory on how it got there? And is it the same across all projects? I mean, structurally, is it dikes, sills? What's the working theory here?
I mean, I'll preface it by saying I'm not a geologist, as much as I sometimes pretend to be when I'm not. Um, the generally pegmatites come, at least one of the theories, possibly a little outdated, is that these things come from a granitic source. So think about your countertop granite, and during a continental collision, these things collide with whatever the host rock is. It doesn't really matter necessarily. And the melt, the granitic melt has to be um, what they call like an S-type granite. So it's already elevated in lithium. You have to have a certain amount of lithium within that melt in order to form spodumene bearing pegmatites. So during a continental collision, this S-type melts, sometimes remelts, and further concentrates the you know elements that they call it uncompatible elements that don't really want to crystallize until there's really nothing left except those uncompatible elements. So they get if you go to, I think it's the last slide in the deck, there's this regional zonation to these pegmatites where you can see in the pink, this is your um, S-type granite on the
Mhm.
bottom.
Okay.
And these pegmatites essentially like fart out of this granite, and as you get further and further away, the pegmatites become more and more evolved. And usually, structure plays an important role in this as well. And lithium comes out kind of second last. Cesium's the last one to come out, the most evolved type of pegmatites. But point is say you know where your S-type granite is, you know where your source is. You can somewhat use that as a model where, okay, you're walking away from your S-type granite, you start seeing pegmatites, you start seeing the mineral beryl, which is high in beryllium. And you say, okay, I gotta keep walking, and you eventually find tantalite. You're like, okay, gotta keep walking, and maybe you find some structure where this stuff is hosted on. So you might walk along that structure, and you might finally start seeing spodumene. Generally, there's like this Goldilocks zone where lithium mineralization is spatially related to how far you are from this S-type granite. The Goldilocks zone being about 4 kilometers away on average, but I will say this is a very, very idealized model. In reality, you might find spodumene even within your granite itself. So it's this is a model.
And
Every
and
system is different.
So this project, you could have fooled me, by the way, Koby. I mean, if you had told me that you're a geologist, I would have totally believed you. But then again, I'm not a geologist myself, so I don't even know if that's a compliment. Maybe it is. SBC, that's one of the projects that are under the KoBold JV, or is it not?
SBC in Flanders is under
Right.
Flanders North and Flanders South are under
Flanders
KoBold.
North, Flanders South. Okay. So which one of those three projects, do they want to work on all three this year, or is that something that would
Yes.
be, yeah, okay. But when you say work, is it drilling all three of them this year?
Um, I can't comment on that.
Fair. Yeah. That's something that I suppose you're going to have in outlined in a full news release as well.
Well, yeah, like I'm pretty cautious with what I can share.
Sure.
Um, I do last thing I want to do is say the wrong thing and piss off a good partner.
Right. It is their decision then what happens when they go, where they go, and how much they drill. That's all their decision then.
Yes.
Okay. Good. Is all the work permitted? Would they have to get additional permits if they wanted to drill or any other type of agreements in the meantime?
I will comment on just the drill, the how drill permitting works in Ontario is you have to know your drill pad locations first.
Hmm.
So, by all means, these are early stage projects, and I'll say what I would do if I were to be calling the shots on SBC alone is I wouldn't be drill permitting yet because you have to know where your pads are going to be. And this is assuming that we operated the project fully ourselves. Okay, so um, we would do more prospecting there because I'm of the view that what was found to date, we barely spent any time here. We prospected about 2% of this project. I think the best is yet to be found. So if you're going to drill, I think you want to go. If we were going to drill, we would want to make sure that we're drilling our best target first. And if we have to do more homework to do that, then we will.
Hmm. What's your favorite target of the three that you get to keep? I suppose Gucci is the most fun one to pronounce, but which one of the three is your favorite?
Yeah, I'll say with the caveat that this might change by the end of the summer here.
Hmm.
But I'm really excited about Toivo
Okay.
right now. I think it's got similar potential to SBC, and it's just hasn't really been tested.
How is your relationship with the First Nations at Toivo?
Our policy with First Nations is we engage early and we engage often.
So, do they want you there? Are they happy with you being there?
Yeah, and I got to be careful with what I say, but overall, our relationship is positive. I have a texting relationship with their chief. I'm able to give them a call, and we hear out their concerns. We've met with them multiple times, including in person.
Okay. Are any of the projects that you have right now in a challenging situation or a situation where the relationship with the First Nations still has to get resolved, or is all that already taken care of?
So to do the work that you need to do, you actually don't need to. So the work that that we've done to date, um, basically, unless you're doing any line cutting or drilling, that's where you really need First Nations approval. That being said, we engage even for the stuff that we don't necessarily, legally at least need their permission to do. I kind of see it as something that we do have to do regardless. But yeah, no, we're very open and transparent with what our plans are. I won't say with which nations because I'm actually not allowed to, but we do have exploration agreements in place with some of our projects.
Oh, okay. So what I'm checking for here essentially is that are you going to be able to do serious work this year and provide enough news flow into the market without being, held back by any type of paperwork or agreements or relationships? That's really what I'm asking here.
Yeah. I mean, our portfolio is vast and there's basically wherever you stake ground, there's nations that you have to engage with. In Ontario and Quebec, that's how it is. There's no trying to stake far enough away from there's reserves all throughout this province.
Hmm. Okay.
Yeah, like do I see, to be honest, I don't really see the First Nations communities as a liability, and I think that mindset needs to change because it's a question that I get from investors where how close are you to a First Nations reserve?
Hmm.
And on some of our projects, like we're next door neighbors. And then it's like, okay, I'm at, instantly it turns people off. But for me, it's like, why can't that be seen as an asset where you're developing a project and you have potentially a local workforce. You have people that know this ground better than you. You've people that can help you on your journey and, build a mutual relationship with them.
Hmm. Yeah. Well, that is always a topic when it comes down to Canadian exploration, of course,
Mm.
and for a good reason too. So you do have to do it decently. What else? You mentioned M&A. Might as well touch upon it a little bit more in depth on it as
Mhm.
well. Is it likely that we're going to see more M&A from you in 2024?
Yes.
2025, excuse me. I'm
Yes.
living in the past.
Yes. Absolutely.
Yeah. Okay. Interesting. Well, I mean, I could ask you 20 questions about that, but there's probably not much that you can tell me right now. So I suppose I'll just have to
Yeah.
on it.
I will say though, like, this conversation in terms of, okay, how do we prioritize projects or which projects are taking priority? M&A is really going to, throw a wrench into what I'm currently telling you right now in terms of how we might be ranking our projects and what we plan on doing this summer.
It's interesting, and I know we'll follow up in conversations, future conversations in the summer and throughout. So it'll be good to catch up on that. What are you going to do for marketing? I mean, a newly listed company marketing lithium in this market. It's not going to be easy. You said you don't want to pay pumpers. What are you going to do? You're going to a mix of conferences and digital, or what are you planning?
Yeah, I'm not. Yeah, a lot of the reason that people do marketing, there's kind of two broad reasons in my view, which is one, you got to get the word out there. You can't do nothing, or else no one's going to know about the great work that you're doing, and you're giving no one a reason to buy your stock because they don't know about it. The other reason that a lot of marketing happens um, is so that way people can get off their stock and get out of their paper, can find volume, generate volume to sell into. Um, so not that kind of marketing, if you know what I mean. We have no reason to be, um, founders are, I'm locked in for terminal value on this thing. So there's no, uh, I'll keep saying it again, but there's none of that Vancouver shenanigans or Toronto shenanigans where we're trying to get people that were in early to be able to unload their paper. Like there's none of that. So I think what the type of marketing that we're doing, like we're starting with you. We're also doing we also will be doing another. The agreement is not finalized yet, but call it another Antonio like.
There's more of me. Someone needs to
No,
say
well,
the
there's no one like you, Antonio, but
YouTube.
call it, I don't know, what would you describe your marketing as? I'd say,
I don't know. That'll be up to you. I suppose in terms of where you see that fitting for you. For me, it's just essentially I have more questions than answers, and I try to get it out of people. What I'm really though wondering about here, Koby, why I'm asking you about marketing is because I'm thinking liquidity. Half of the company is owned by insiders. A little bit more is locked away as well. Out of those insider shares, none of that is coming onto the market. How do you figure out liquidity, especially again, given that
yeah,
it's a lithium market? So not everyone's rushing to trade these stocks right now. Most people are just staying away. So how do you figure out liquidity?
yeah, we will be announcing marketing engagements shortly, which
Hmm,
will answer that question better. I'm just being very cautious of what I say right now because I don't want to
sure.
be
Yeah.
divulging information too early.
Well, that makes sense. And again, let's maybe leave then the rest for another conversation sometime in the near future when you can give me more of these answers, more specifics I'm looking at, what I've written down on exploration program and whatnot. It'd be good to just talk right after you've listed. But what about for now? What do you think I'm forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
But you did a really good job at covering the bases, Antonio. Um, yeah, no, I don't. I guess we could chat more the lithium market if you'd like. Why is it that, now why am I no longer afraid to catch a falling knife? Like, what are my signs that I'm seeing that make me comfortable calling a bottom in the market right now?
That's good. Let's give me a bit of a teaser here. I actually want to do a whole episode on this because it is interesting. I like countercyclical. I like the idea of being countercyclical, but I don't think I understand the lithium market well enough to make the kind of a bet that you are. So, give me a teaser here. Why lithium? Why now?
Yeah. People forget how volatile this metal is. This was in the last 10 years, lithium was the worst performing metal, for those last 10 years, and it was the best performing metal approximately for those last 10 years. And average down cycles last 2 to 3 years. And, the height of the lithium market was in 2022. So I think we're getting close. And I think what a lot of people really, really underestimate is just how much stronger demand gets when prices are low. People have held on to their previous demand numbers, which they came out with, over the last few years when, people were talking about even sodium ion batteries. Remember that? Now no one's talking about that anymore. I haven't heard that since 2023 because prices have come down a lot that it no longer makes sense to pursue it. But let's go back to what Rick Rule usually says. If we've eaten so deep into the cost curve, approximately over 40% of lithium miners on a cash cost basis, over 40% of lithium mines aren't making money right now. And if you look on an all-in sustaining cost basis, it's significantly higher than that. So either we have to stop mining lithium, lithium demand goes to zero. I don't see evidence of that at all. Or prices need to go up. And it's such a small, fickle market. There's maybe about 140 total lithium mines right now. And it doesn't take many mines to come online or offline in order to be the difference between a surplus and a deficit. Because it's such a tiny market. So I'm extremely bullish about lithium. And if we're at a bottom right now, I think that the bottom has already happened. And I think we are on the run up, but if we're not, I think we're darn close to it. And I think people are slowly starting to become more optimistic. My hope is that they don't become too optimistic because we are in M&A mode and we're trying to get it while it's hated. Yeah. We're trying to acquire lithium projects while they are hated. So yeah, we are trying to design a vehicle that is the ultimate counter-cyclical lithium play. We have a very low burn rate. We have revenue generation through the KoBold agreement. We have KoBold generating catalysts for us on their dime. We also have a team in place that has proven our ability to do a lot with very little funds. And we're not closed off on looking outside the box in terms of lithium, and you'll see what I mean shortly. So we'll save that for later.
You're giving me a lot of teasers, but that's good because it means we can have more conversations in the future. Now that I know the company better, and once you're public, I'm going to have more information as well. I'm going to be able to go more in depth and hopefully provide some pushback on that lithium narrative and see where eventually we come out. I don't have any of that pushback right now, unfortunately. But again, it'd be good to do just an episode on lithium alone. Sit down, talk for an hour on lithium or something like that. What keeps you up at night, though? I mean, you say it's not the project, it's not. You've got the partner. You want to do M&A. It's cheap. You're very bullish on lithium, so it's not any of these things. But what is it? I mean, and nothing's really ever perfect. So what's the main risks for you?
I sleep pretty well, to be honest. Like I have a lot of fun with what I do, and what keeps me up is excitement. I'm not saying that there's nothing that worries me. Like there's a lot of things that, there's still a lot of risk in this. Um, and I guess there's also, I'll say this, in many of my interviews in the olden days, it wasn't that long ago, but people would often ask me like, hey, where should we be positioning? Which country makes sense? Which type of lithium should we be looking at, Brian? Should we be looking at um, should we be looking at spodumene? And the answer is that there's pros and cons to everything. And I think diversification makes a lot of sense because nothing is a home run. DLE is not a home run. Jury's still out. We have yet to see commercial DLE. We have yet to see commercial clays. These things were back when these juniors were promoting it. They were supposed to be producing in 2024. And guess what? None of them are in production yet. And they just keep getting pushed out. So there's pros and cons to everything. Lithium in Canada, dare I say it, lithium in Canada isn't even necessarily a home run. So I hope that's a good enough teaser for you.
It is, and I really appreciate you sitting down with me. Thank you so much for your time today.
Thanks, Antonio.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."